How to reduce the tension of home loan EMI. 5 smart habits that can save lakhs of rupees. Imagine a middle-class family buys their first house after many years of saving. On the day of the housewarming, there is fragrance in the house, there is a puja, relatives are there, and the glow of a fulfilled dream is on their faces. But next month, when the first EMI is deducted, a slight fear comes along with the happiness. Then the second EMI, the third EMI, and gradually the dream of a house becomes the biggest responsibility of the salary. Every month, as soon as the money comes into the account, the EMI goes out, and a question arises in the mind. Will this loan go on like this for 20 years? The fear is that if the home loan is not managed wisely, the interest can significantly increase the real cost of your house. And the curiosity is, can the tension of EMI be reduced and relief from the loan be obtained quickly by adopting a few simple habits? Buying a house is not just a financial decision for the ordinary man, it is an emotional milestone. But due to rising property prices, today most people have to take a home loan. In the beginning, the bank sanctions the loan, the builder gives possession, and the buyer feels that the work is finished. But the real journey starts after the loan disbursement. A home loan is a long race. In this, just paying the EMI is not enough. Rather, understanding the interest rate, tenure, prepayment, refinance, and cash flow is also necessary. The borrower who understands this can finish that same loan quickly and at a lower cost. First of all, there are 2 parts to a home loan EMI: principal and interest. In the initial years, a major portion of the EMI goes toward interest and the principal decreases slowly. This is the very reason why the first 5 to 7 years of the loan are very important. If the borrower can make small prepayments during this exact period, the total interest outgo can be significantly reduced. Many people think that until there is a very large amount, the benefit of prepayment won't be received. But the truth is that even regular small prepayments can make a big impact in the long run. The first smart habit is to look at loan prepayment not as a bonus, but as a strategy. Whenever you receive an annual bonus, tax refund, incentive, maturity amount, or any extra income, instead of spending the entire portion of it, put some portion into the home loan principal. Prepayment directly reduces the outstanding principal. If the principal decreases, future interest will also decrease. Especially for individual borrowers who have taken floating rate home loans, the RBI clearly stated in 2014 that banks cannot levy foreclosure charges or prepayment penalties on floating rate term loans. This means that many borrowers can reduce the loan quickly without any penalty, although confirmation from your loan agreement and bank should definitely be taken. Now 2 options come up after prepayment. 1. Getting the EMI reduced. 2. Getting the tenure reduced. If your monthly income is tight and the EMI is causing stress, then getting the EMI reduced can provide relief. But if your income is stable and you can pay the EMI comfortably, then getting the tenure reduced often gives more interest savings. Because the EMI remains the same but the loan finishes quickly. This is exactly where the borrower should look at their life situation. If the cash flow is weak, EMI reduction. If the cash flow is strong, tenure reduction. The second smart habit is to align the EMI date with the salary date and keep it on auto debit. Many times people miss the EMI even while having money. The reason is simple: they forgot the date, the balance in the account went somewhere else, or the payment was manual. A missed EMI does not just levy a penalty, but can also damage the credit score. And if the credit score weakens, refinancing the loan or doing a balance transfer can become expensive in the future. Therefore, setting the EMI auto debit 2 to 3 days after the salary arrives is a practical way. As soon as the money comes into the account, the EMI goes out, and then the rest of the expenses are planned accordingly. Auto debit does not mean that the borrower should close their eyes. Every month after the EMI deduction, the SMS and bank statement should be checked. If the ECS bounced, a technical issue came up, or there was an insufficient balance, then it is necessary to contact the bank immediately. A loan as big as a home loan demands discipline. Even a small late fee, if it becomes a habit, increases the cost of the loan and can spoil the credit history. Therefore, give more priority to the EMI than to the electricity bill or shopping, because it is linked to both your house and your credit reputation. The third smart habit is to increase the EMI when income increases. Many people upgrade their lifestyle after a salary hike. A new car, a new phone, more travel, more shopping. But if a home loan is going on, putting a portion of the salary increment into an EMI increase or prepayment can be a very wise step. Suppose your salary increased by 10%. If you add a little extra principal repayment to the EMI, the tenure of the loan can be significantly reduced. This saves interest and brings the date of becoming debt-free closer. Increasing the EMI is not necessary for everyone. If you do not have an emergency fund, insurance is weak, children's fees are under pressure, or the job is unstable, then build safety first. But if the income is stable and expenses are under control, then the EMI step-up strategy is very powerful. Some banks also give a step-up repayment option, where the EMI can be increased as the income increases. To put it in simple language, a slightly higher EMI today can save many years of EMIs in the future. The fourth smart habit is to keep an eye on the interest rate and understand refinancing or balance transfer. A home loan is a long-term product, and the interest rate keeps changing with time. If your loan is running on an old benchmark, a higher spread or a higher rate, and a better rate is available in the market, then a balance transfer can result in savings. In this, a new bank closes your old loan and you start the repayment to the new bank at a lower interest rate. But one should not transfer immediately just by looking at a 0.25% or 0.50% lower rate. It is necessary to calculate the processing fee, legal charges, valuation fee, documentation cost, and remaining tenure. The benefit of refinance is higher when the outstanding principal is large and a significant tenure is left. If the loan is almost about to end, then the transfer charges can be more than the savings. Therefore, calculate the total saving before a balance transfer. You can also make a rate reduction request to the old bank. Many times, the bank offers a lower rate to an existing customer by taking a conversion fee. Because of this, there is no need to transfer the entire loan. The borrower should not remain passive. They should keep an eye on bank rate resets and market rates. The RBI strengthened the rules regarding rate resets in 2023 for floating rate EMI-based personal loans, which also include home loans. Lenders have to tell options to borrowers at the time of an interest rate reset, such as increasing the EMI, increasing the tenure, or a combination of both, and the option to switch to a fixed rate can also be given to the borrower according to the terms. This means that when the rate changes, the borrower should understand whether the bank has changed the EMI or increased the tenure. Many borrowers do not even get to know that the EMI is the same, but the tenure has increased by several years. The fifth smart habit is to make lump sum payments in between. This is just like prepayment, but the mindset is different. Some people cannot give extra monthly but can give a large amount once or twice a year. Like a bonus came, a small payment for land was received, an FD matured, or extra profit came from business. If this money is separate from the household needs and emergency fund, then putting it into the loan principal can give a big benefit. In long tenure loans, reducing the principal quickly is the most powerful way. But before making a lump sum payment, one mistake should be avoided. Never put the emergency fund completely into the home loan. Being debt-free is good, but being cash-free is dangerous. If you put all your savings into the loan and a medical emergency comes up next month, then you might have to take a personal loan or a credit card loan, which is often more expensive than a home loan. Therefore, first secure the emergency fund, health insurance, term insurance, and essential goals. After that, put the extra money into the loan prepayment. Now understand the psychology of paying off a home loan quickly. Many people get scared looking at a 20-year loan and think that it has to be finished as soon as possible. This feeling is right, but balance is necessary. If your home loan interest rate is reasonable and you can get a better post-tax return from long-term investments, then some people run the loan slowly and make investments. But if there is stress from the EMI, income is uncertain, or becoming debt-free gives mental peace, then prepayment can be better. In personal finance, a single answer is not right for everyone. Tax benefits are also a part of the calculation. In the old tax regime, home loan principal repayment can come within the overall limit of Section 80C, and the interest deduction on a self-occupied house property can be received under Section 24B, with conditions. But continuing to run an unnecessary long loan in the name of tax benefit is not always right. If you are giving too much money in interest just to save some tax, then there can be an overall loss. Consider tax saving as a bonus, not the main reason for the loan strategy. There is a practical trick for home loan borrowers, which is to definitely read the annual loan statement. In this, there is information about the outstanding principal, interest paid, principal repaid, rate, tenure, and remaining balance. Many people keep paying EMIs for years, but do not know how much their outstanding is and how many years are left. If you do not track your loan, how will you optimize it? Once a year, take the amortization schedule from the bank. See what the tenure became after the rate change. Then decide whether to do a prepayment, increase the EMI, or negotiate the rate. Another important matter is insurance. A home loan is a long commitment. If something untoward happens to the borrower, the burden of the loan can come upon the family. Therefore, it is necessary to have adequate term insurance. Many banks offer loan protection insurance with a home loan, but the borrower should understand the premium, coverage and terms. Taking insurance does not reduce the loan, but the family gets protection from risk. Financial planning is not just the name of reducing EMI, it is also the name of protecting the family. Now suppose a borrower has taken a home loan of 50 lakh and the tenure is 20 years. If he prepays a little principal from the bonus every year, increases the EMI slightly when the salary increases, renegotiates with the bank when the interest rate is high, and never misses an EMI, then his loan journey can change a lot. That same loan which was looking like a burden of 20 years might finish in 12 to 15 years. The exact saving will depend on the loan amount, rate and prepayment timing, but the principle is clear. The faster the principal decreases, the less the interest will be generated. In a home loan, the maximum benefit comes from early action. In the final years of the loan, a large portion of the EMI starts going toward the principal. But in the initial years, the interest is higher. Therefore, the earlier the prepayment is made, the more the possibility of savings is. If the borrower remains disciplined in the first 5 years, the direction of the entire loan can change. This is the reason why the loan should not be ignored right in the beginning. There is another problem for many borrowers. They keep paying the EMI, but other expenses remain uncontrolled. Credit card dues, personal loans, shopping EMIs, and lifestyle loans eat up their cash flow. In such a situation, making a home loan prepayment becomes difficult. Therefore, if the home loan is to be finished quickly, control high-interest debts first. Free up cash flow by reducing expensive liabilities like credit card outstandings and personal loans. Then an extra payment on the home loan will be possible. Buying a house is a dream, but loan management is a responsibility. The bank gave the loan. This does not mean that the bank will do your financial planning. The bank will look at its interest. The borrower will have to look at his interest. When to make a prepayment, how much EMI to keep, whether to reduce the tenure or the EMI, whether to switch the rate or do a balance transfer, all this will have to be decided by the borrower after understanding it.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.